What if a single government vote could reshape the entire crypto market? Today, Bitcoin is testing 107K as the Genius Act passes the Senate with a decisive 66 to 32 vote. Meanwhile, Ethereum co-founder just dumped $262 million worth of tokens. This is Crypto Pulse, where we break down what really matters in the next 6 minutes. Hey everyone, Alex from Moonward Capital here with today's Crypto Pulse. If you've been waiting for that moment when crypto regulation finally brings clarity instead of fear, today might be that turning point. The Genius Act has cleared the Senate with strong bipartisan support, potentially unlocking billions in institutional capital. Let's dive into what this means for your portfolio and the broader market. Let's start with a quick market overview. Bitcoin is currently trading at 106,138, up 0.5% and testing resistance just below its all-time high. Ethereum is underperforming at 2,536, down 1.24%, and we'll get to why in just a moment. The overall market is showing strength with a total cap of 3.16 trillion and $96.8 billion in 24-hour volume. The Fear and Greed Index sits at 63.48, firmly in the greed territory. But the real story that most analysts are missing? The explosive growth in the data sector, which has surged to 14.5% market mindshare, up from just 4.98% yesterday. Now let's break down the biggest catalyst. The Genius Act passing the Senate with a decisive 66 to 32 vote. This is monumental. It's the first comprehensive regulatory framework for stablecoins in the United States. The bill creates a dual regulatory pathway: federal oversight for larger issuers and state regulation for smaller ones. It requires 1.1 reserves backed by liquid assets like U.S. Treasuries, regular audits, and clear redemption policies. What's particularly notable is that 16 Democrats crossed party lines to support this bill, showing strong bipartisan momentum as it heads to the House. Quick question for you. Do you think regulatory clarity will drive the next leg of the bull market? Drop your thoughts in the comments below. Now to the concerning news. Ethereum co-founder Jeffrey Wilke has transferred 105,736 ETH worth a staggering $262 million to Kraken, potentially signaling a major sell-off. This explains why Ethereum is underperforming despite broader market strength. While this represents just 0.08% of the total ETH supply, the psychological impact and immediate selling pressure are causing ETH to lag behind Bitcoin in the current rally. Interestingly, even as this selling occurs, institutional player Abraxas Capital added 46,295 ETH worth $115 million to their position, bringing their total to 350,703 ETH. In another major development that's reshaping the stablecoin landscape, USDC issuer Circle is reportedly exploring acquisition offers from both Coinbase and Ripple, valuing the company at approximately $5 billion. Circle officially maintains their not for sale and continues to pursue IPO plans filed in April. However, sources indicate Coinbase has the advantage due to their existing partnership through the Center Consortium and $8 billion in cash reserves. This potential consolidation signals growing maturity in the stablecoin sector, exactly what the market needs as the Genius Act establishes regulatory guardrails. Now to the most overlooked story, the data sector has captured an unprecedented 14.5% market mindshare, up from just 4.98% yesterday. This surge reflects growing institutional demand for on-chain analytics and AI integration. Projects combining blockchain data infrastructure with AI capabilities are seeing massive inflows, with platforms like Pyth Network and Hyperliquid leading the charge. Hyperliquid in particular stands out with their 97% revenue to buyback model, generating $2 million in daily revenue. This shift towards sustainable revenue-generating protocols signals a maturing market focused on fundamental value creation rather than speculative narratives. So what does this all mean for your investment strategy? First, consider reducing Ethereum exposure temporarily until the co-founder selling pressure subsides. A 25% allocation seems prudent compared to the typical 30-35%. Second, increase stablecoin allocation to capitalize on regulatory clarity. The Genius Act will likely benefit compliant stablecoins like USDT and USDC. Third, explore exposure to data-focused projects which are showing explosive growth in mindshare. Look for those with sustainable revenue models like Hyperliquid's buyback mechanism. Finally, maintain a strong Bitcoin position as it tests all-time highs with institutional tailwinds, particularly with the Texas Bitcoin Reserve Bill also advancing through the state legislature. We're witnessing a perfect storm of regulatory clarity, institutional interest, and sector rotation that could reshape the market landscape in the coming weeks. The Genius Act, Circle's strategic decisions, and the explosive growth in the data sector are interconnected developments pointing toward a maturing market focused on sustainable growth and regulatory compliance. Monitor the House vote timeline for the Genius Act's final approval expected before May 26th. Watch for ETH price action as Wilca's transfer could create continued selling pressure. And pay close attention to Circle's strategic developments, as their decision between IPO and acquisition could reshape the entire stablecoin landscape. If you found this analysis valuable, hit that like button and subscribe to Moonward Capital for the most insightful crypto market updates delivered twice daily. I'm Alex, and I'll see you in 12 hours with our next Crypto Pulse update.